But. So if Liddy won't rule out any more money being poured into this sinkhole, how will AIG ever be able to pay off the money it already owes? Let's ask Congressman Jeff Fortenberry. He joins us now from Washington. Congressman, good to talk to you again.
Thanks so much.
You know, I'm not holding my breath for a payback from AIG. Are you?
Well, you're asking the right question, and just to paint a picture of the scene today, Mr. Liddy was there with a bevy of attorneys and staff members, and he was pressed on the issue of allowing Congress to see his books, and he balked. And when further pressed, he basically turned to the attorneys and agreed to some framework in which Congress could review the books. The American people are very cynical about this company and have a right to be so. They've operated in secret with the administration and with the past administration on this restructuring plan. As you pointed out, there's $180 billion of taxpayer liability on the line. 40 billion of that is stock purchases by the American people, which unfortunately are now worth about $4 billion. Look, to put it in perspective, again, $180 billion is larger than 160 economies of the countries in the world today.
Oh, I know. It's awful. But you said something, Congressman, that intrigued me. You said that he's not opening the books. I mean, we own those books.
We do own those books, and when further pressed on it, he agreed to some framework to allow members of Congress to review them, protecting sensitive information, understandably, but he did agree in principle to that. But he had to be pressed on it, and that's a real problem because the American people have a right to know through their representatives as to how his restructuring plan is going to get our money back. You know, it's $600 per every viewer that's watching. It's their taxpayer money that's on the line. I have 5 children in my house. That's over $4,200 that I've got invested in this company. I want my money back. So he has a plan, but I think we need to ensure the American people that Congress has an oversight responsibility here as well.
Well, I think, you know, Fox Business, we've been kind of successful. We've had sort of a 50-50 record at suing federal agencies to try to get information out of them. We got information out of Treasury that way, not yet from the Federal Reserve Board. Maybe we should try to get it from AIG since they're essentially a branch of the government right now.
Well, it's fundamentally a public company owned by the United States taxpayer.
That's
right.
You
know, this company has an interesting history in that its holding company was structured as a thrift. Now, I had a constituent from Nebraska here today who's involved in commercial real estate investments. I said, are there any more thrifts in Nebraska? He said, no, I thought those were all gone. This is something out of It's a Wonderful Life and George Bailey's type of bank. So clearly the structure of this company was such that it took the path of least resistance, the pathway where it had minimal oversight. A sector of that company engaged in reckless behavior with these exotic financial instruments, and they participated significantly in the overall decline of the American economy.
Well, of course, and now the people getting bailed out, ironically, are some of the TARP recipients, like Goldman Sachs. They made some terrible bets on real estate and other things. They took out the credit default swaps from AIG as insurance, and they're getting 100% payment on that. 100%. They're not being forced to take any haircut, even though they're already taking TARP money. I mean, that, Congressman, that's just not right.
Well, this is very hard to explain on Main Street, where you've got community bankers and family-owned banks who acted prudently, made loans based upon their understanding of the underlying obligation. These companies that, again, created these exotic financial instruments that were not tethered to an understanding of the underlying obligation and took very liberalized risk and didn't have adequate capitalization and reserve to cover it, and then now are forcing the American people to cover, again, that reckless behavior, is just really problematic.
These are smart guys. They made dumb decisions. They had the information, the analysts, the economists, to see whether or not AIG had enough capital that they didn't have to back up these insurance guarantees. They should be forced to take a haircut. Final question for you, Congressman. AIG is now selling off some of its assets. They sold one asset for $1.2 billion, their Japanese headquarters, another asset for $1.9 billion to a Zurich company. Bottom line is, where is that money going? Are taxpayers getting the money? Because it's only a fraction of what we put into it, but it is a couple of $1 billion bucks.
Well, again, there's a direct purchase of the stock of $40 billion, and it could go. There's authority to actually give them more, unfortunately, but and that is basically 90% down in value. The CEO, Mr. Liddy, and again, you know, he's a gentleman who has volunteered basically to take over this company. He's not being paid. I assume that he's doing that because he has some significant background in this. I think he was former chairman of Allstate, who, by the way, was a competitor, or AIG was competing against Allstate. and he's not being paid. But at the same time, to be forthcoming about this plan that he does have, and he's suggesting that it will take 3 to 5 years to get the taxpayer money back, with members of Congress who have oversight responsibility for the American people, I think is of utmost importance.
All right, Jeff Fortenberry, Republican from Nebraska. Thank you very much for being here, Congressman. Appreciate it.
Pleasure being with you. Thank you.
Welcome back our panel.